day, and welcome to Narend's Weekly Wraps. I am Viv Govender, and as usual, at the moment at least, it's going to be another Trump-heavy, update this week. But we're going to add some new AI stuff coming in as well. I think we've focused on Trump for the last couple of weeks just because of the dominance he's had in the stock market. But I think we need to look at, also some of new AI news. For those that don't know, the Trump tariff saga continues. It goes, it goes really badly for global markets. We are starting to see Chinese retaliate in ways that I think are to be expected. I want to cover a couple of things in this particular discussion, things around, what the Chinese can do, not just around things such as, for instance, rare earths, but also the bond market. Then we're going to cover also what the progress in terms of a deal between the US and other countries is looking like at the moment. And then finally, we can look at the AI situation and OpenAI's latest releases. I think that, looking back in history, a few years down the line, we're going to think more about what OpenAI did today or this week than what Trump is doing at the moment, because we had some pretty, significant releases from OpenAI. Now, let's start off with the Trump situation. Markets came down again this week. Especially after Jerome Powell, the head of the US Fed, basically came out and said that tariffs being bigger than have been anticipated means that there's more inflationary pressures, even though there are obviously still, issues with the growth of the US economy, to be looked at. And therefore, that was seen pretty negatively by the market. He's come out basically, and the impression people got was, if you're given a choice between promoting growth or fighting inflation, he's going to fight inflation. And if you're dealing with a state like stagflation, like people are saying the US economy is going to go into stagflation, being where there's low growth and high inflation, he's probably going to go and fight the inflation first before worrying about the growth. And that's going to make the low growth even worse. And so markets came down pretty significantly on that news. Now, many people, including some young people in our office, don't remember what time was like before, what things were like before the 2008 financial crisis. That was 17 years ago, a significant amount of time if you think about it. I mean, you could have graduated university back in 2008 and you could be almost 40 right now, and all you experienced in that entire period of time was the post 2008 easy monetary policy situation, ZIRP, zero interest rate policy. And in that scenario, whenever the market came down, basically you bought, because you buy the dip. Because what happens when the market comes down is that the central banks get scared and they go in and start buying, bonds, but even in some cases buying other stuff as well, flooding the market with money and pushing asset prices higher. But if we are seeing a situation in which this scenario is not working anymore, then we could look back in what we saw in the 1990s, 1980s, periods before 2008, where it was quite common for us to see, significant pullbacks in the market without central bank intervention in order to basically support the market. That'll be, I think, a big paradigm shift going forward. So the market's a bit scared about that. Now, the Chinese have started to respond to these US, actions. Initially, they did very little, but now they started to be more aggressive. The aggression is coming through, things like, for instance, like we expected in the past, they were, cutting back on exports of rare earths. Despite the name, rare earths are not that rare. The thing is that China is one of the few places in the world that's sophisticated enough and willing to deal with the pollution that they will basically go and mine these things. There's plenty of rare earths around the world, in Africa, in Europe, and so on. But in most places that are developed enough to do this thing properly, they don't want to mine it because it's basically, it's quite polluting. It's not a nice thing to mine, and it's kind of like when it comes to pollution, especially in the West, they like to ignore the pollution that happens outside their borders. So they'll say they have zero carbon or they have like low emissions, it's whatever. But all the pollution was done by factories in China, etc. So the Chinese are basically cutting back on this. It's not impossible for the US and other places to catch up, but I mean, like I said, pollution is pretty bad. From these kinds of mining, and therefore you're finding it very difficult to open up new mines in places like the US, which has these raw materials, by the way, in order to basically replace Chinese supply. But more insidiously, what the Chinese are doing right now is also possibly intervening in the bond market. And there's even discussions that they are coordinating with places like Canada and maybe in the EU in order to basically sell bonds to the market. Why? Well, why would the Chinese be coordinating with the US, with Europe and Canada, etc., against the US? Because, quite frankly, Donald Trump, what he's done is he's basically created a barrier between the US and everybody else. It doesn't say, okay, you're my friend, Canada, you're my friend, China, you're my enemy. We're saying, no, Canada, the EU, China, you're all enemies of a different stripe. And so in that scenario, basically the enemy of my enemy is my friend. And in this scenario, the EU and maybe Canada are looking to places like, even Japan are looking to places like China and saying, okay, the US is going up against all of us. And so if we can band together, maybe individually we're not strong enough to take on the US, but together we are. And so what they are doing is possibly selling bonds in the market. What does that mean? If you sell a bond in the market, what it does is it basically increases the yield of the bond. The bond price and the bond yield are inversely related. It means the bond price goes down. If you sell a lot of stuff, the price goes down, the yield goes up. Why is the yield important? Because the US basically needs to borrow a lot of money this year to basically maintain its fiscal situation. Something like $6 trillion this year alone. A lot of this money was basically borrowed initially when interest rates were much lower. Now, $6 trillion is a lot of money, but it's even more significant when you think about the fact that it may be borrowing at about 4.5%, maybe 5%. 5% of $6 trillion, that's a lot of money. That's $300 billion. Okay, that's a huge chunk of cash, even for a country like the US. It's roughly half of what the US is looking to raise in terms of all these tariffs they're putting out there. Now, if the US is basically going to be faced with, a massive tariff situation with 5%, towards interest rates, so a huge interest rates problem where, interest rates could be like 5%, instead of like 3% or 3.5%. A lot of the benefit that they're going to see from the tariffs, okay, are going to be diminished by the fact that they're going to have to pay interest on the new debt that they're taking out. And $6 trillion is just what's happening this year. The total burden that the US has is something like $35 trillion. Now, if you're looking at $35 trillion, every percent of $35 trillion is $350 billion per year. If the Chinese and the Europeans, etc., can basically raise US interest rates, to about another percent beyond what they should be, it's going to cost them $350 billion a year, every single year, to service that debt. And that is a very, very strong cudgel that they can use against the US. And people are even arguing that maybe one of the reasons that the US is backing down from some of these tariffs recently. The other things the Chinese are doing is that they're going on a pretty jingoistic, quite aggressive social media campaign. I don't know if you follow things like TikTok and YouTube and whatnot, but if you do follow the social media stuff, you'll see a lot of videos from Chinese people saying, "Hey, look at this Birkin bag, look at this LVMH bag, look at all these fancy bags, look at these fancy shoes, etc. You buy them for 30,000 euros or whatever it may be. We actually make it for 3,000. Same material, just as good. Why don't you come directly to us and cut out the middleman?" That kind of stuff is happening in China. The Chinese are not the low-cost producer of the world. And that's what the Chinese advantage, not just being the low-cost producer in the world. The Chinese are much more expensive to hire than the Indians, for instance, or the Bangladeshis, or the Vietnamese. Over the period of time that the Chinese have been the world's manufacturer, they've gotten better at manufacturing. They are really, really good at making stuff. Okay? And yes, it's not to say that the Indians or the Bangladeshis or the Vietnamese, etc., or the Mexicans or whatever could not make stuff going forward, but it's going to take a lot of time to build that expertise up. And right now, the Chinese are sitting with a lot of the world's expertise in terms of manufacturing, capacity in terms of manufacturing, and they are basically using this as, again, a way to basically pressure the West around these tariffs. Going forward, what is the situation going to be like? Now, there's a common statement, or like a saying that trade wars often lead to real hot wars. Why? What trade does is it makes countries intertwined. So if you're intertwined economically with another country, you don't really want to go to war with that country because it's going to hurt you, it's going to hurt them. It's a lose-lose. But if you don't have those linkages, it makes a war less painful for you. If there's virtually no trade between two countries, going to war doesn't really hurt you if you can damage the other country. Why? Because there's nothing you need from them because they're not trading with you. So I do think what's happening with the US and China right now, with this ramping up of tensions, even though it's very early days, could lead to a hot war down the line. And the way this is probably going to come about is with Taiwan. Why? Because right now, what the US is doing, because of all the stuff around AI, and I'm interested in AI, but it's something that everyone in the world right now is interested in. It's not just a Governor kind of obsession. Everyone in the world realizes that AI is coming at a really fast speed. everyone in the world knows that one of the things you need for AI is the chips. Taiwan makes the best chips in the world. They have an advantage that is virtually insurmountable in the near term from any other country. The US is trying to onshore some Taiwanese production to try and insulate them from these chips. But at the same time, they also are preventing the Chinese from getting any of the Taiwanese production because they are basically banning the export of these high-end chips to China. Now, if you are China, what do you see? You see a country that's basically helping your enemy, Taiwan. You see no real negative for you from a chip situation to basically attack Taiwan. If one of the things people said if the Chinese do attack Taiwan, what the Taiwanese could do is just destroy the fabs. These fabs are incredibly sensitive. It doesn't take a lot to destroy a fab and make it go out of commission virtually indefinitely. A few pieces of dust in one of these fabs is enough to slow production down. If you just throw a bag of flour in some of these places, it might be enough to damage it for a significant amount of time, let alone blowing it up. And so the thought was, the Taiwanese, if they were invaded, destroy the fabs. There's no real prize for the Chinese to win. But if the Chinese aren't able to access the stuff from the fabs, and the US needs this stuff from the fabs, from the Chinese point of view, an attack on Taiwan doesn't look as dangerous for them because they're not going to lose anything. All they're going to do is harm the enemy, which is the US. And I'm not saying this is going to happen right now. I'm just saying that these trade situations lead to incentives that mean that war becomes more viable going forward. Okay. Now, talking about AI, and getting away from Trump for a bit, we are seeing new models being released. And this week we had new models from OpenAI coming out. And OpenAI basically took the lead again. There's just no other way to say it. The models are seen to be very good, and including agentic models. So we're seeing the first, publicly available agentic models of any quality out there. And what does agentic models mean? That means these models can do things. Now, the way people have normally used, AI models until now has generally been prompting. Okay, draw me a picture, give me a plan. Not do this thing for me. Don't go and, use tools. Don't go and use other things. Just give me an answer. That's what the usual thing has been. The new models are using tools. Okay, so instead of you basically having, the OpenAI, by the way, it's weird. It's O3 is better than O4 Mini, by the way. So if you look at what the best model is, it's O3 at the moment. O3 basically can use tools, can go out and basically, use things like mathematical tools, etc. And so if you look at the ability of this model now to basically, solve mathematical puzzles, solve mathematical questions, it's improved dramatically. It's like giving somebody a calculator. This is just the first step. OpenAI is bringing it out. Expect other companies to start bringing this out very soon. The thing about agents is that agents are the true power of AI. Why? Because agents don't rely on you being smart enough to do the thing. It just means you have to have the need and ask the agent to do it for you. Now, we're not at that stage just yet where you can ask it to do anything you want, but it's getting better. And like I always say, this is the worst these things are ever going to be. These agents coming into play right now are the first step for the new phase of AI. No longer is it going to be AI writing your program. No longer it's going to be AI basically writing you, a cover letter for your CV or drawing your picture. Now AI is going to do actual work for you. Okay, maybe not work that you could say, okay, do something and I'll give you 10 days to do something, but work we can say do something and I'll give you 10 minutes to do it for me. Okay, and the longer that period of time lasts, if it goes from 10 minutes to 20 minutes to an hour to whatever, that you can rely on the AI to do something without having human feedback, the more and more powerful this AI is going to become, and the more and more influential on economic activity it's going to become. And the fact that we are seeing agentic AI coming out in the first quarter of, now is the second quarter of 2025, okay, in the first half of 2025, this is slightly ahead of some of the expectations people had about when we can expect, these AI models to really start doing these kind of things. There is predictions that the way this is going at the moment, if you can have AI, especially the cutting edge models, really doing tasks for you, you can take those tasks and suddenly start replacing workers, things like junior developers, maybe even like senior developers in certain cases. you can start doing things like replacing, certain levels of management, certain levels of, administration in different organizations. This is where AI stops being something which is just a novelty and maybe affecting industries like graphic design or maybe movies and so on, and really starts affecting the real working world. And I think what's happened from OpenAI this week is like the first step on that line. And I think that we must always remember that if you look at the grand scope of history, there's a famous saying that somebody would around Voltaire's time, that somebody would once ask, who was the king under Voltaire? Okay, because Voltaire was the more important aspect of that particular age. Who was the leader of England under Newton? Because Newton was the more important figure at that point in time. It may be a point in the future where we ask, who was the president under OpenAI? And we must always remember that when it comes to the long term, it's technology that really drives these things. Okay, we may have short-term macroeconomic, foibles one way or the other, but the long-term technical situation, the long-term technology, development path seems to be going, really gangbusters. And I in the past have said to you, when it comes to AI, the real danger was we hit a wall. At the current moment, I see no danger of that wall being anywhere near in the future. And we are not that far away, maybe a year or two, from these AI agents really making a great impact on the workforce and, more importantly, on the development of new AI models. And then we're going to see an acceleration of these developments. Okay, that's it for this week. Thanks for joining me. I look forward to speaking to you guys again next week. Cheers.